This is the Scrap Metal Recycling Commodities and Economic Report by BENLEE and Raleigh Goldsboro Recycling, June 19, 2017. Last week, commodity and economic reports were mostly negative. U.S. steel production fell slightly behind last year, but still is actually ahead of where it was a few months ago. Oil fell $1.25 a barrel to $44.74 on news of continued high U.S. and gasoline inventories. OPEC is actually considering reducing exports to the U.S. to get our inventories down, which will help U.S. energy jobs and lower gas prices, thereby actually helping parts of the economy. The oil rig count rose for a solid 22nd week in a row, the longest stretch in 30 years. The oil rig count is now at 747. It's at a multi-year high, but the rate of increase has been slowing, with oil down about $10 a barrel in recent months. Iron ore fell $1.50 a metric ton to $56, following many other global commodities on a lower trend in recent weeks, which actually should help keep steel prices down. Scrap ferrous prices remain somewhat down as well, but still double about what they were 18 months ago and slightly up for the year. Many believe we could see steady prices with only slight changes in the months to come. Hot dip galvanized steel came down as well to $8.65 a ton, with continued news of some industries slowing, but there are reports actually of plate and rebar prices increasing in the past week. Stainless steel forced scrap, after months of holding steady, started following nickel down, falling to 29.5 cents, a number not seen since last year. Copper fell 8 cents to $2.56 on no major news other than global softening. But actually, global demand remains slightly increasing. Prices are up about 2 cents this morning to $2.58. The one-year chart shows copper prices have actually remained in a band in recent months since the major increase of last year. And copper inventories continue to fall, but remain well ahead of a year ago. The fall could help stabilize prices, though. Aluminum prices fell 2 cents to 86.25 and remained slightly off its 2.5-year high, with demand staying strong. Aluminum inventories hit new about 9-year lows on this good demand, which is helping keep upward pressure on prices. The U.S. Federal Reserve raised interest rates 0.25% last week. Related, they slightly raised their actual projections of growth in the United States and lowered their inflation expectations, which is great news. Student debt is now $1.4 trillion, larger than all credit card debt and all auto loan debt. Students with high debt have a tougher time buying houses and cars, so debt is a drag on the U.S. economy. Home construction, a major source of good jobs and a strong user of commodities, slumped 5.5% versus April to an annualized rate of 1.092 million. A crazy low number in that in 1972, home building was 2.5 times what it is today. The Consumer Sentiment Index fell to 94.5. While high, it's the lowest reading in 7 months, with reasons being Democrats have developed a more negative perception of proposed economic policies, and Republicans have less confidence that these policies will actually be passed. Retail sales, a key driver of the economy, decreased by 0.3% in May versus April, with lower sales of vehicles, electronics, appliances, sporting goods, and more. This drives lower commodity prices. Initial unemployment claims fell to 237, which remains well below the key measure of 300,000, which indicates that job growth remains solid. That's good news. Wall Street was a bit bumpy with the announcement that Amazon offered to buy Whole Foods, yet the Dow Jones Industrial Average still closed at a new high of 21,384, and high stock prices make people feel wealthy, which will help spending. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.